What up? It's Nate with Grindhouse Capital. I'm going to read you guys some news. I'm not a financial advisor. From Decrypt, Ethereum devs fix software after Berlin upgrade goes awry. Open Ethereum client nodes stop syncing to the blockchain shortly after the planned Berlin hard fork. In the early hours of Thursday morning, the Ethereum blockchain underwent a network upgrade. Very quickly, it became clear that something was wrong. Just 294 blocks into the Berlin hard fork, there was a consensus error with one of the software clients, Open Ethereum, and nodes weren't syncing to the blockchain. What that means is anyone running that client, 12% of all Ethereum nodes, essentially was unable to use the blockchain until the error was fixed. The problem even led to an outage on Block Explorer Etherscan. That issue has now been fixed, according to developers with Open Ethereum, the second largest software client after GETH. Ethereum users can utilize any number of clients, among them GETH and Parity Ethereum, to actually get onto the blockchain. It's very loosely analogous to choosing among different web browsers to get online. They all basically do the same thing in different ways. However, in this case, when Ethereum clients don't agree on some basics, the whole blockchain is at an increased risk of attack. In a tweet from Open Ethereum, we are pleased to release version 3.2.3, which includes a fix for the Berlin upgrade consensus error. The problem was related to a transaction referring to a smart contract that doesn't yet exist but is planned for a future upgrade. Gnosis CEO and network contributor Martin Koppelman tweeted today at OpenEthereum.org, thus handled the gas pricing of that transaction slightly incorrect, which caused all subsequent problems. The block was rejected as invalid. In other words, the Open Ethereum software priced a single transaction differently from other software clients. That had knock-on effects that caused a whole block full of transactions to be rejected by the Open Ethereum client, but not the others, at which point the blockchain fell out of sync. As a result, exchanges such as Bitstamp and newly public Coinbase disabled withdrawals of ETH and ERC20 tokens, which run through the Ethereum network. According to Marius van der Weyden, a developer with Go Ethereum, which helped to resolve the issue, the bug was obscure enough that the issue never occurred while the latest upgrade was still being tested. Wrote Koppelman, after installing the updates, Open Ethereum nodes should be able to resync without any issues. Example, no resync from Genesis or manual deletion of a block necessary. Translation, everything's cool now. Crisis averted. From Cointelegraph, DOGE passes Uniswap and Litecoin to become the 8th largest cryptocurrency by market cap. The price of the meme-based cryptocurrency is at an all-time high as it approaches 20 cents. The price of Dogecoin has surged seemingly without any push from prominent figures on social media or major developments in the project. According to data from CoinMarketCap, the price of Dogecoin is more than 18 cents at the time of publication, with a market cap of roughly 23.8 billion. The token's most recent rally has had its price surge more than 63% over the last 24 hours, passing both Uniswap and Litecoin, and became the 8th largest cryptocurrency by market cap. More retail outlets have adopted the currency as a form of payment in recent days. On Tuesday, a popular Miami nightclub announced it would be accepting Doge upon reopening as payment for tables, drinks, and merchandise. Dallas Mavericks owner and Doge proponent Mark Cuban also reported the basketball team's store had sold more than 122,000 Doge worth of merchandise, which is about 16K at the time of publication, since first accepting the token in March. Cuban said the team will never sell one single Doge ever. Though Tesla CEO and Doge enthusiast Elon Musk has tweeted one of his memes amid the token's price surge, the recent rally may simply reflect the climate around the crypto market. Mainstream media attention was largely focused on Coinbase's coin stock being listed on the NASDAQ this week, as both the price of Bitcoin and Ether reached new all-time highs. Yep. Doge to the moon. From Beat and Crypto, concern over Bitcoin use for illicit finance is significantly overstated, says the former CIA director. Morell is a 33-year veteran of the agency. He served as deputy director and as acting director in 2011 and again between 2012 and 2013. The lobbying group Crypto Council for Innovation commissioned the study. Crypto Council was formed recently by the likes of Fidelity Investments and Coinbase. Morell came to two key conclusions in the study. The first was that the concerns over the use of Bitcoin in illicit finance are significantly overstated. The second was that blockchain analysis is a highly effective intelligence gathering tool for fighting crime. Morell admitted that he did not expect to reach these conclusions. He presumed that those expressing concern over Bitcoin had a comprehensive understanding of the subject. These include influential global finance leaders like Treasury Secretary Janet Yellen and President of the European Central Bank, Christine Lagarde. However, he realized an essentially negligible amount of illicit finance took place on blockchains upon performing the analysis. According to Chainalysis, less than 1% and falling. Morell noted that this was less than the illicit activity conducted through traditional banking system. This figure ranges between 2 and 4% of global GDP. Morell was even more impressed with the industry's ability to target illicit actors on the blockchain. He highlighted analytic firms such as Chainalysis, CipherTrace, and Elliptic, employing advanced forensic and artificial intelligence tools to fight crime. Morell said they were able to track down actors' actions and identify previously unknown people of interest. He said he was literally blown away by how they find illicit activity. This is great intelligence work. Based on these results, Morell said it was imperative that the U.S. not waste its time fretting over blockchain instead of leveraging it. He emphasized, we need to make sure that the conventional wisdom that is wrong about the illicit use of Bitcoin doesn't hold us back from pushing forward technological changes that are going to allow us to keep pace with China. The Chinese advancing with their own CBDC is something the current Biden administration is watching carefully. Despite this, Fed Chair Jerome Powell recently said the digital dollar is too important to rush. Of course it is. From News BTC, Fed Chair says still working on digital dollar as China pulls ahead. Fed Chair Jerome Powell said the U.S. Central Bank is currently running technical experiments on how a digital dollar would work. There are many subtle and difficult policy choices and design choices you have to make. We're doing all that work. He reiterated the process also requires consultation with the public and Congress before any decision is made. This casts doubt on whether a digital dollar would ever see the light of day. Powell's words have triggered unease among those who fear losing the technological Cold War to China. World central banks have come increasingly under pressure to launch digital versions of their domestic currency in recent times. Some believe it is the appropriate response to combat the rise in private cryptocurrencies such as Bitcoin. Others see it as an inevitable evolution of money for the digital age. Several key nations, including Japan, Thailand, Eurozone countries, and Russia, have publicly endorsed such a move. However, in the past, Powell expressed indifference, saying there's a lack of demand for a digital dollar, as consumers already have many existing alternatives. It is also not clear to us that there is a demand for this, he said. You know, consumers have plenty of payment options. They're not clamoring for this. Ripple Chair Chris Larson sees the issue as bigger than U.S. customers. He believes a digital dollar is pivotal in defending America's position as the leading economy and retaining the dollar's status as the world's reserve currency. Referring to China, Larson said that other nations who recognize and embrace blockchain technology have the opportunity to seize American stewardship of the economic order. For China, this is a once-in-a-century opportunity to wrest away American stewardship of the global financial system, including its ultimate goal of replacing the dollar with the digital yuan. The digital yuan has been 7 years in the making and already been trialed in several real-world pilots by the People's Bank of China. On Monday, Lai Bin, head of the PBOC, announced a further expansion of testing via 6 additional pilot programs. These are the locations in China where the pilot programs are. This cements China's position well ahead of the U.S. in terms of a nationwide rollout. Philip Gillespie, the chief executive of liquidity provider B2C2 Japan, shared his concern on what a digital yuan could mean for Bitcoin. He fears it could be one of the biggest risks facing the leading cryptocurrency. Chinese citizens are already banned from converting yuan to tokens, but many circumvent this by on-ramp using Tether. But with the digital yuan, the Chinese government has the power to block Tether. And on to the next one. From Crypto, Ripple execs move to completely throw out SEC lawsuit. XRP hits highest point in 3 years. In an abrupt turn of events, top Ripple executives have asked that the SEC case with all charges be completely dropped. As a result, Ripple CEO Brad Garlinghouse and Chris Larsen have filed separate motions to dismiss the SEC lawsuit. In an unprecedented move, the organization identified 2 high-profile executives as defendants in its lawsuit for abetting and assisting the company's alleged unregistered token sales. The Securities and Exchange Commission has already accused XRP of having security-like tendencies and functions. Garlinghouse and Larsen's lawyers claim that the majority of their transactions are mainly foreign in nature. After maintaining that some XRP buyers were still located in the U.S., Garlinghouse motion agrees that the SEC has failed to provide facts about the specifics of at least one apparently unregistered transaction that had occurred in the United States. Additionally, the defendants argue that the charges of Section 5 infringement should be rejected by the court because the plaintiff's complaint failed to plausibly allege any kind of recklessness in proving that Ripple executives were deliberately breaking the law through the sale of the XRP token. Larsen's lawyers further contend that the SEC is barred from obtaining punitive relief due to the statute of limitations, which restricts the time period in which a legal case may be taken, adding heat to the argument that the SEC might indeed be going beyond its authority. The SEC appears to be failing to prove the case it has made against Ripple and its CEOs Brad Garlinghouse and Chris Larsen after years of continuous scrutiny. According to Ripple members, the SEC has refused to provide any clear information of any discrete, fraudulent, or unregistered XRP deals, purchases, or transfers for more than 2.5 years prior to filing its formal lawsuit. Despite acquiring Mr. Larsen's XRP trading papers and having the opportunity to identify each bid and sale for which monetary compensation is requested. As of publication, XRP is the 4th largest cryptocurrency in the world in terms of market cap after scoring a 3-year high of over $1.70. This is also a 30% rise from the previous price over a 24-hour span. Despite the continuing legal fight with the SEC, Ripple has had significant success by expanding into Australia and Malaysia. And from the Daily Hodl, here are the 10 altcoins to watch in April as risk tolerance swells in crypto, says trader Luke Martin. Venture Coinist founder and crypto analyst Luke Martin is revealing the name of 10 coins to keep an eye on as the crypto market develops a bigger appetite for risk. In a new Profit Maximalist episode, Martin identifies a select group of altcoins in the decentralized finance space he says offers significant upside potential. Mid-cap DeFi projects are starting to do well versus blue chips that are slowly grinding higher. It might be because those valuations of blue chips, those things have been discovered. Once they're worth billions and billions of dollars, how much more upside is there versus a new project that could eventually reach that size? The mid-cap DeFi altcoins in Martin's list are decentralized exchange protocol Thorchain, ticker Rune, peer-to-peer exchange platform 0x, ticker ZRX, decentralized derivative protocol Mirror Protocol, ticker MIR, and decentralized perpetual contract protocol Perpetual Protocol, ticker PERP. Martin also highlights that he's keeping a close watch on other groups of altcoins that he says are poised to make big moves. Coins that have not moved in forever, a lot of them which are still near their all-time lows in Bitcoin terms. These things have a ton of room to run if it's actually alt season for large cap alts. That's another trend I don't think a lot of people are paying attention to, but I think you should. As we started this week, XRP, Tezos, XLM, Litecoin, EOS, Ethereum, names you would not expect to be leading the market, actually are leading the markets. The crypto trader adds that his bullishness in large cap cryptocurrencies stems from the growing risk appetite of traders in the digital asset space. Generally, when large caps pump, it's a sign of people's risk tolerance going up or willing to take risks in crypto, which is generally a positive sign for alts. There you go. That's the news for today. We will catch you tomorrow. I'm not a financial advisor. Peace.